The U.S. Securities and Exchange Commission has approved Nasdaq Bitcoin Index options, a move that introduces a new regulated derivatives product for both institutional and retail participants. This approval marks a significant development in the crypto derivatives landscape, allowing traders to gain exposure to Bitcoin's price movements without directly holding the asset. The options are cash-settled derivatives tied to a Nasdaq-administered Bitcoin index, meaning no actual Bitcoin is exchanged in the contract's execution. This is a departure from traditional futures or spot trading, where ownership of the underlying asset is required. The approval is tied to SEC Rule Release 34105549, which outlines the framework for these options to be traded on a regular exchange. The structure of these options is designed to fit within existing securities clearing systems, which is why the approval process involved the Options Clearing Corporation as well. The index itself is built in collaboration with CF Benchmarks, a firm known for its work in digital asset benchmarks. This partnership has been instrumental in developing a reliable and transparent index methodology that underpins the new options contracts. For institutional investors, the approval of Bitcoin index options provides a new. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Hedging tool. Funds that hold Bitcoin through a spot ETF can now use put options on the index to limit downside risk, or use call spreads to define upside targets. These options are traded in a regulated venue with standardized contract terms, which is a major step forward in bringing institutional-grade tools to the crypto market. One of the key advantages of these index options is that they do not require participants to hold Bitcoin at any point. This is particularly important for institutions that face compliance and custody barriers when dealing with cryptocurrencies directly. By using index options, they can gain directional exposure to Bitcoin's price without the need to manage digital assets on their balance sheets. This separation of exposure from custody could encourage more traditional financial players to engage with crypto markets, as it reduces the operational and regulatory risks involved. The approval also signals a broader trend of regulatory clarity in the crypto space. Nasdaq's digital asset index infrastructure has been under development for some time, and the SEC's decision represents a validation of that effort. It suggests that the regulatory environment is becoming more accommodating for crypto-related products that are structured within traditional financial frameworks. However, the market's response to this approval remains to be seen. While the product is now available, adoption will depend on factors such as liquidity, volatility, and the overall health of the Bitcoin market. If Bitcoin continues to show strong institutional interest and stable price behavior, then these index options could see significant trading activity. On the other hand, if the market experiences a downturn or regulatory uncertainty resurfaces, adoption may be slower. The next signal to watch will be the initial trading volume and participation levels for. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. These index options. High liquidity and active trading could indicate strong institutional demand and a broader acceptance of crypto derivatives. Conversely, low volume or limited participation may suggest that market participants are still cautious or that the product has not yet reached critical mass. In the broader context, this approval is part of a growing trend of regulated products that offer exposure to crypto assets without requiring direct ownership. As more such products come to market, the line between traditional finance and crypto will continue to blur, potentially leading to greater mainstream adoption of digital assets.